Hi, Vi from myfractalrange.com here. Today's video will be longer. I will show you my daily routine, my process of risk managing and generating ideas for my watch list. And maybe this video will help you to better understand how I use all the tools. So, of course, our risk management platform, myFractalRange, also correlations, momentum, Hearst, and everything. First of all, I need to say that this video is not investment advice. All opinions expressed are not recommendations, and this video is for educational purposes only. Okay, with that out of the way, let's jump in. So first of all, I always check my fractal range, and here I have a watch list with, in my opinion, the most important assets to look on a daily basis. So of course, what we have here, we have a US 10-year yield, we have a dollar, gold, all the major equity indices, couple of SPY sectors. So in this case, it's XLE and XLF, financials and energy. Also, I use TLT for longer duration bond ETF and SHI and XLU. In this case, XLU is here just because I have an open trade, a spread trade of XLU IWM. I will talk about it later. But basically, these are the assets that I'm monitoring every morning when I wake up on myfractalrange.com. So first of all, what we see here. I always like to filter my assets based on upside and downside ratio. So let's do it here. And actually, we see kind of a very interesting thing here that for example, biggest upside downside ratio is on a US 10-year yield. So I'm not long bonds. Bonds had a great run this week, but I don't have any fixed income position right now. But if I had, I would think about reducing the positions, or at least not adding to the bond trade here. Because there is a high probability that rates will reverse, at least in the short term. So, of course, dollar, I like dollar, and dollar is my main position. Currently, I'm at 80% cash, which is USD. And knowing that all my trading accounts and general accounts are denominated in the euro, which is my base currency, I converted my euros to UUP a long time ago. I believe it was December. So yeah, dollar is very important to watch. Now gold, QQQ, Nasdaq index, SPY, S&P 500 index, IWM, and all others. As you can see, in equity space, almost all assets in this watch list is bearish trend. So of course, one rule of thumb is for me is never buy a bearish trend. So I don't have any outright long positions in equities. Now, based on upside downside ratio, actually some assets look quite good on a short side. Because, as you know, if upside and downside ratio is below 1, it means downside is bigger than the upside. So after a few minutes, we'll jump into Python, and I will show you all the correlations and momentum stuff, and then I will explain why this week I didn't like the idea of shorting indices. And yeah, so it will be after a few minutes. So that's the first thing I do. So of course, from the main assets, only XLU is bearish trend, but if we go to the instrument page, you will see that XLU is 85% in a position of range. It means that the upside is very small compared to the probable downside. So if you don't have any positions in XLU, I would not open a long position here. Of course, I already talked about it in Twitter Spaces. In bear markets, I never have a directional bet, so I never buy equities on the long side without hedging them. So that's the main reason why I trade spreads and why I have a spread of XLU versus IWM. And I will show that spread later. Okay, so let's go back to watchlist. So yeah, as I said, XLU is the only one which is bearish, which is bullish trend from the equities I monitor on a daily basis. First, of course, I monitor a lot more different watch lists, but this is the most important one. This is always the first thing I do. Okay, so now we have a good view on the overall markets that basically a lot of bearish trends in equities, not a lot of potential probable upside in equities, and also we know that 10-year yield also has a probability to reverse and the yields can go up for a bit. We'll see how it works out. But yeah, after that, the most important thing I start with is correlations. So now I will generate all the correlation charts in real time, so it will take a few seconds. If you're interested in what tools I use for all my data analysis outside myfractalrange.com, so it's basically simple Python. So I have Python scripts for everything I do, and I just run them, and Python does all the calculations and spits out all the charts when necessary. Okay, so we'll start from all the major assets. I call them SPY sectors and other stuff. You will see. So we will start from 30-day correlations. I'm running the script. It will take a couple of seconds. And here we have. So first of all, I'm mostly monitoring these two charts. So of course, this is a daily return correlation. So it's a 30-day correlation of daily returns of all those assets. So it's a matrix. It's very easy to view and understand. In my opinion, matrix is the best way to visualize correlations data. So, and what I look for in those charts. So first of all, I always check a couple of things. So one is stock bond correlation. So for bonds in my matrices, I always use TLT. So let's take a look into this column here with a TLT. And first of all, SPY. So today on a 30-day basis, TLT has almost no correlation to SPY, but it's slightly positive, and last week it was negative. So that was the main reason that in all time frames stock bond correlation was negative, was one of the main reasons why I was not shorting equities, because in this regime I noticed from backtests and from overall trading and signal perspective that usually big moves down, crashes happen when stock bond correlations are positive. So we'll see how these correlations will change on a daily basis. I tweet those matrices daily on my Twitter, so we'll see. But if those correlations will start strengthening on all 30, 10 and 5-day basis, I will consider searching for setups to short equities, and I will expect another bear market leg down. So yeah, first thing, as we can see, so QQQ is also has almost no correlation to TLT. IWM is a bit higher, 0.09. It's still quite low, but this setup is continuing for at least 6 months. So that's why on my short basis, short direction spread trades, I like to use IWM. First of all, of course, is the overall strengthness of a trend, but also these correlations also I like them more than QQQ or SPY, for example. And in my opinion, SPY and the DIA, which is the Dow Jones Industrials, is not the best asset to short in bear markets, just because there are assets that tend to fall a lot more in bear markets. So that's the first thing. And the general rule of thumb is in bear markets, you want to see stock-bond correlations positive. And if they are negative, it can be considered historically more normal thing. So you don't want to short the markets when those correlations are negative. Second thing is dollar correlations. And actually, these are pretty normal for this regime, because of course we expect those to be negative, because first of all, of course, selling a stock creates a demand for USD, and also problems, geopolitical and economical problems in other parts of the world, especially Europe, also creates a lot of demand on USD. Of course, differences in rates and so on. So the general rule of thumb for this regime is that you want to see stock dollar correlations negative, and you see that. So nothing to note here, because in this regime it's quite a normal thing. So later I will show you what I mean by that. I will show you a rolling chart of SPY to UUP correlation, and you will see that stock dollar correlations remain negative for quite a long time, and there was a very clear signal of regime change here. Okay, and the third thing I look into in these matrices is the overall SPY sector correlation. So basically, how high are all the sectors correlated one to another, and to the index itself, to SPY, and so on. And it tells me if the risk is building up or no. So simple example, high sector correlations to SPY tell you that all sectors, basically all industries, are moving to the same direction, whether up or down. And when these correlations are extremely high, the risk is building up, and basically that thing just can't continue further. And in most cases, it's a quite clear sign that this house of cards is about to fall. So what is a high correlation? Of course, it depends on time frame, but as a rule of thumb, anything above 0.96 can be considered very high. So now, for example, you will see, and that's why I'm talking about sectors, not indices, because, for example, when you see that SPY has a 0.98 correlation to QQQ, well, it's kind of normal. I mean, but if you see that other sectors like XLF, XLY, and so on have those numbers, so for example 0.98 and so on, it's not normal. It means that people are selling everything, or people are buying everything. So you can call it risk building up, you can call it crowdiness, you can basically, but that's just what it tells you. So yeah, and this is 30-day correlations. So another chart I like to look at is not a daily return correlations, but also I like to look at a rolling 5-day correlation. So basically, what is the difference? So in daily returns are quite easy to understand. Basically, it's the return, today's return compared to where the asset was yesterday. But I like to compare rate of change of the last 5 days. So for example, I have a time series of 5-day returns. So for example, Friday's return from the last Friday, Thursday's return from the previous Thursday, and so on. So it's quite useful to see how assets are correlated if you are holding it for a week or longer. So basically it reduces the noise, and it also can tell you quite different things. And here we see that correlations are higher. So first of all, SPY to TLT is quite positive, and sector correlations are very high. We see a lot of purple, a lot of numbers like 96, 99, 998, and so on. So the risk is building up on a longer time frame, but if we don't see that on a daily return basis, it can tell you that chop is here. I always tweet about the chop and what I mean. So if you use lower position sizes and hold positions for longer, this thing can work quite well. But on a daily basis, this chop is not good, so I don't like it. Usually, the rule of thumb, I want to see, if we're talking about high cross-sector correlations, I want to see them high on a daily and on a rolling 5-day basis as well. Okay, as promised, now I will show you a chart of SPY UUP correlations, because I think this one is interesting and maybe it will help you to understand the signal more clear. So I just ran the same script again. Yeah, okay. So here we are. So it's a rolling 30-day SPY correlations versus UUP, and it's daily returns. So now if we zoom in a little, let's say we do from 2020. Okay, and you see that those correlations are negative most of the time, but the last time it was positive was approximately January of 2022. So in November we saw weakness in small caps. In December finally we started to see weakness in things like S&P, mega caps, mega cap indices, and so on. And in January there was the last signal that if we are bearish on stocks, so the best thing now would be to long dollars, and actually the signal was quite good. So yeah, but the purpose why I'm showing you this is just to tell you that in this regime seeing negative dollar stock correlations is nothing special, and actually it's what you want to see and what you can expect. Okay, so now let's move to 10-day. So from 30-day, what we took that SPY TLT is no longer negative. Of course, it's not strongly positive on a daily return basis, but and also we know that we noticed that risk on a daily return basis is relatively high, but it's not extreme. So if we can make a checkpoint that on a 30-day basis we don't see clear signals for a market collapse. Okay, 10 days, and this one is quite interesting, because first thing we can see is that SPY TLT correlation is deeply negative. Still, we'll see how it changes on a daily basis, but that's another reason why I don't like being short this market, even though I'm bearish. But I expect, first of all, choppiness or maybe even a bear market rally, and I expect that we can see SPY and other things higher than we see now. So it's not good. Not good if you are shorting, I mean. So yeah, UUP, nothing special here. On a 10-day basis, most correlations to equities is negative, and yeah, it's very good, especially XLU. I like it. So let's move to rolling 5-day correlations. Rolling 5-day correlations, same here, a bit higher. SPY TLT is slightly negative, but also basically no correlation here. What I like to say, I will repeat it over and over and over. Maybe it will help you to understand my way of thinking and my process in general. But I want to see high sector correlations on all time frames, on both rolling 5 days and a daily return basis, and for shorting the markets during the bear market phase. I also want to see positive stock bond correlation in all time frames. Yeah, so hope it helps. So okay, what we can take from 10-day correlations is the most important thing, that SPY TLT is still negative. Very good. Okay, now let's move to the last time frame I used in my daily process, which is 5 days. And here we have it. Okay. So let's start from daily returns. SPY TLT is positive, very interesting. I'm starting to like it. So basically, if SPY TLT show negative correlation will start to weaken, so correlation will start to go up on a 10-day basis and also on a 30-day basis. I will be more convinced to search for interesting spreads to play the next bear market rally. And of course, as I said, especially in bear markets, I do long short trades, basically macro positions, things like cyclicals versus defensives, low beta, high beta, and so on. So I will talk about it later. Okay, so one thing to note, yeah, like I said, SPY TLT is positive. Dollar correlations are slightly negative in most cases. So regarding dollars, nothing really interesting here. I'm quite bullish on the dollar, but I expect that we can see a correction in the dollar index, UUP, and so on. That's why I'm holding dollars, but I have no plans to add to the dollar position at the moment. Let's move to 5-day, and this one I see is very interesting. Yeah, so basically 5-day returns are highly correlated. So here we already start to see the risk building up. Only SPY TLT is something that is not confirming that. But if we talk about equity sectors, it's like a ticking bomb. I would call it a ticking bomb. So if we see such image on 10-day correlations and maybe even on 30-day correlations, which is more rare thing, usually you will spot those on 5 and 10 days. But yeah, if it moves to 10 days, I will let's put it this way, I will become quite bearish. Okay, again, so SPY TLT negative, so no reason to short the markets. Okay, so all those charts I tweet them on a daily basis on Twitter, but of course I cannot tweet everything I'm looking at. That's the main point of this video. So now I will show you other correlations that I'm looking at and that I'm not tweeting on a daily basis. So first of all, let's look into developed markets. So developed market ETFs, and again we will start from 30 days. And I'm running the script now. After a few seconds we will have some charts. Here it is. Okay, so this one is less purple, and you can expect that. Okay, so this one is developed market country ETFs, and of course I always include the SPY because that's the main thing what I'm looking at when I'm looking in international assets, especially equity assets. Basically the most important line is the bottom one, and what I want to see is basically same thing but from two corners. So of course, first of all, I want to see if international equities are highly correlated to SPY. And another thing I want to see is which countries have the lowest correlation to SPY, and it actually helps me quite a lot when generating ideas for new spreads, new trades, or assets to put into my watch list and monitor. So during our last Twitter Spaces, I was talking that I added a new spread position, which was EWH versus EWO. Now those correlations are a bit higher than it was before, but you can still see what was the main reason why I chose those. The main reason I didn't choose Norway is because Norway's economic situation is quite different. It's not that bad, and especially they made a lot of money from oil and so on. So in bear markets, I just tend to skip Norway. It's not based on signal; it's just based on my overall view. So don't take my word on it. In bear markets, I search for weak spots. Okay, so, and you can see that EWH has 0.73 on a 30-day basis to the SPY, and EWO has 0.71 versus SPY. Later I will talk about momentum, and then you will understand why I chose EWO on a short side and why I chose EWH on the long side, because my process consists of multiple things, and today's video will be quite long. I will try to show you all the steps. So yeah, you will see that those things have quite different momentum scores. Yeah, but basically when we are looking at international equities, I'm not trying to search two international countries that are very low correlated one to another, because now we can see, for example, that EWH has quite low correlation and so on. No, I don't do that. Usually I check how they are correlated to the main index, which drives everything, which is the SPY, of course. So okay, let's move to rolling 5 days quickly, and you will see the same scenario, that EWH has 0.74 and EWO has 0.62. So it's very interesting for me. That's why I added those into my watch list, and that's why I started monitoring all our signals on those. Okay, so I will try to do it a bit faster. So now we'll quickly move to 10 days. Yeah, script is running. I'm doing everything in real time. I have no charts prepared, but luckily Python is quite fast, so good. Okay, so this is a 10-day correlation, and here is what I also like, that on a 10-day basis, EWH has 0.36, so very low correlation. Of course, you always expect equities to have positive correlation, so it's very rare thing that you will see a negative number, but actually you don't need a negative number. All you need is a low positive correlation. And the WO has 0.64, a bit higher, and actually it's a good thing, because my thinking is, of course, that I'm bearish on SPY, I'm bearish on overall equity markets, but I always use SPY as a proxy. So let's say that in the longer term I'm quite bearish on that. So an asset that I choose on a short side, it's good that it has higher correlation to the SPY compared to the asset that I chose on a long side. But we'll talk about it later when we reach momentum. Okay, rolling 5 days. Yeah, so EWH 0.54, very good. Again, Norway stands out, but I don't like to trade it in bear market, especially in inflationary market, even though I think that at least in the US soon we'll have a phase transition, and we will not see inflation numbers a lot higher than we saw now. So it's just my opinion, don't take my word on it. I don't do macro predictions, but if I had to, I would say that inflation in the US will stay relatively high, of course, but it will not go up a lot from current values. Okay, so EWH 0.54 and of course 5 days. So let's try to do it quicker. Okay, here we have. And bam, EWH is a negative 0.4. Very good thing. Very good thing. EWO 0.33. I like it. Actually, short-term correlations are weakening because even though those were very low last week, but I don't remember seeing that low value. So very nice. So yeah, so now you understand how I use those matrices and what information it provides me. Of course, you must understand that correlation is not causation. It means assets move not because of correlation, but it tells you what is happening, and it helps you to build your own view, your watch lists, and to prepare to take some actions based on our signals if you have any signals. So okay, let's move to rolling 5 days. EWH 0.28, EWO quite high. Okay. And the last one I will show you from the correlation side is emerging markets. So, but with emerging markets I have no positions, so I will just try to find something interesting to show you, but I expect that we'll go through emerging markets very, very quickly. Okay, so return correlations. Of course, I added a SPY, and what we can see that EIDO has negative correlation, EWY has negative correlation, KSA, QAT, that's what you can expect because some of those are of course oil related. From positive low correlations we see ECH, EPU, Poland, EWZ. Actually, then correlation is around 0. I don't consider it low. I consider that there is almost no correlation. So for example, if I see something which is 0.0 something, it doesn't mean that I will say, oh, it's a good trade against. No, it's not a good trade against. It has almost no correlation. Here we have it. I don't have any trades in my watch list based on momentums and correlations. I have ICOL. I'm monitoring that, but I'm still searching for ideas what to put against it. So ICOL, I'm thinking about FXI. I was talking about it on Spaces, but because I have Hong Kong, so I will play this idea using EWH for now. So I have no plans to open FXI, because if you run a correlation of EWH to FXI, you will see that it's insanely high, so it doesn't make any sense. Okay, rolling 5 days. Yeah, same situation. So Poland, EWM, same ECH, which is, and look at ICOL. It's totally negative correlation to the SPY. KSA, QAT, nice. So in emerging markets we started from 5 days. I will skip 10 days and I will just show you what's happening on a longer time frame, which is 30 days, because I don't expect 10 days to look very different. Okay, we have 30 days. So on a 30-day basis, again, so of course on a 30-day basis we don't see negative values, but EPU is quite low, EPHE is quite low also, ICOL, that's why I added it into my watch list, so maybe it will help you to understand how I choose my assets, not for trading but for more serious monitoring. KSA, QAT, so basically same usual suspects, as you can see. and rolling 5 days is yeah, so ECH is quite low, EPHE is quite low, EPU is quite low, KSA, QAT, ICOL, yes. So that's why I don't have any emerging markets trades now, because this situation is continuing for quite a while, and I don't see any new signals from that. Okay, so after correlations, I always see the momentum. I have a proprietary oscillator that I use. It gives me a momentum score. So of course, momentum score can be a positive or negative. And also it can tell me if those assets are overbought or oversold. So I will show it to you, and then we'll talk about it. So first of all, we'll start, of course, from SPY sectors. Yeah, so here I have this chart of 30-day momentum score for SPY sectors and other stuff. And you can see that, well, of course, I added Bitcoin here, so Bitcoin has a very negative momentum score. What has a positive momentum score? So XLP, dollar, also slightly XLU, XLV. So basically, on a 30-day basis, we don't see the reason, for example, to go long SPY. So you could think that it's good to short this market, but there is a reason why I use different time frames. So yeah, longer term, of course, we know that the trend is bearish, and we are in a bear market, at least for now. We know that the longer trend is down, but actually this value is quite low, and when we'll go to the shorter time frames, you will see another reason why I'm not very excited about being net short the market all the way. So let's go to 10 days. One, two, three, and here we go. Okay. So silver looks, of course, terrible. But now let's talk about the SPY, because it is very important here. And as you can see that on the short-term trade is up, short-term risk is up, because SPY has a positive momentum score on a 10-day basis, and actually quite a significant one. 0.84 in a bear market. In a bear market, of course, is a good sign that we need to wait. So again, general rule of thumb, you want to see negative momentum score on all time frames, which of course is not the case here. XLU is very strong on a 10-day basis. Also XLV is quite strong. Yeah, but you can see not a lot of negative values. TLT, yeah, this one is worth mentioning. Yeah, that TLT in the short term, of course, it worked very well for those who bought it, and the signal on yields switched to neutral on my fractal range last week. So yeah, of course, definitely now it's not the time to be shorting bonds. We'll see how bonds will behave next week, because I told you that, for example, US 10-year is very close to the low end of the range. So we'll see what Monday's calculations will tell us. Okay, so SPY positive, TLT positive, so no need to short the market. Let's wait for the clearer signal. And the last one on SPY sectors is the 5-day. Yeah, so what we see here. Yeah, okay, SPY finally turned negative. It was positive, so we'll see how it behaves, but basically I want 10 days to be negative too. So TLT is very strong good for for short-term bond bulls. Again, one red flag is the range, but if we just see the momentum, the short-term trade is up both on 5 days and 10 days basis. XLU looks very good. Yeah, so that's how I use those. I will talk about the interpretation of things being overbought and oversold very quickly. So my general rule of thumb is that above 2 is overbought, below -2 is oversold, but it doesn't mean that asset will revert immediately. I mean, assets, we all know that assets can remain overbought or oversold for quite a long time. If you remember, on a 10-day basis, XLU had 2.6. So how I interpret those things, for example, if I have a position and the momentum score goes way above 2, I will not add to that position, because based on the momentum it's considered overbought. But if our signals say that the game plan is still the same, I will keep that position. Maybe sometimes I will reduce the size, but yeah, so it doesn't mean that if you see momentum score above 2 and you have a long position, you need to get rid of it immediately. No, but in most cases it can be a good idea not to add to it, at least, and use our signals in the process, our tools in your risk management process to decide whether you want to keep it or not. Okay, let's go quickly to the developed markets, of course. And I expect this one to be interesting. So on a 30-day basis, let's run it. Okay, on a 30-day basis, the chart will pop up now, and what we can see. Here we go. EWH on a 30-day basis is basically the only one that is positive. So it's a very good thing, and it also was the second checkbox in the list why I chose this asset on a long side. Let's look into EWO. Yes, EWO is negative. Perfect. So this is on a 30-day. Now let's move to 10-day. And if you want to study those charts closer, you can always just stop the video. So I will just explain why I chose EWH and EWO, because I received some questions about my way of thinking. So I hope this video will be helpful. Okay, so EWH. Wow, what a surprise! 1.4. Not the strongest momentum score on a 10-day basis as well. EWO, what a surprise! It is a weakest momentum score on a 10-day basis. So basically, it was a great spread to add based on momentum. And when I added the spread, it was Monday. So keep in mind that numbers were different, but the overall message was the same. So basically, signal we have not changed. That's why I'm still keeping the spread. So maybe now you will understand my way of thinking about all the different tools in the process. And let's take a look at 5 days for developed markets. And I will skip emerging markets because now you understand how the process works, and I'm sure that emerging markets has no really interesting signals now. Almost everything is negative, at least as I remember. And yeah, this momentum score is not available on MFR for now. I will do my best to tweet as often as I can, but in the future it will be added. So okay, again, what a surprise. EWH 1.1 and EWO negative. So when I have assets in my watch list, I like to combine everything. So first of all, I use correlation to find assets that I'm really interested in based on the regime, macro, and so on. So just a simple example, I'm bearish on the market, so of course I I don't want to be very highly correlated to the market, so I always search for assets that has lower correlation. And in bear markets, at least in bear markets, I rarely trade individual names. I stick to macro or country ETFs or main market ETFs, factor ETFs, and so on. So that's why I'm monitoring those and not some individual names like Facebook, Apple, or whatever. EWH. And now let's take a look into those assets. So I will skip emerging markets, nothing to add here. First of all, let's look at assets separately, but then I will show you that when I think about spreads, I think of it as one asset. So okay, EWH is bullish, upside downside ratio is not very high, so there's always a chance that there's always a chance, but now it's highly probable that it will correct a bit, but it's fine because I see that it has 0.71 on a 3-month Hurst exponent, and I made a video explaining Hurst 1 day ago. It's on my YouTube channel, so feel free to watch that video if you want explanation about how to what this number tells you and how to use it. But we can see that the trend is strong. 3-month Hurst is 0.71. 1 year Hurst is 0.61, which is for 1 year is also not terrible. Okay, so and then I will add EWO. Yeah, which is bearish, so good. First of all, one is bullish, another one is bearish, and also upside downside ratio is below 1, so for bearish trends it's even better. And it also has a high Hurst, and for me it's very important because doesn't matter if I choose an asset for a long side or for the short side. If I decide to trade those separately, I always want the Hurst to be high. But now we'll combine a spread. So on my fractal range, you use a semicolon, no, not semicolon, colon to create spreads. So EWH colon EWO. Let's click, press enter, and yeah, you can see that this spread is bullish. Currently, again, upside downside ratio is below 1, so don't expect it to go in a straight line. I never expect that because such asset doesn't exist that goes up or down in a straight line. But look at this number, 0.82 on a 3-month Hurst. And actually, we can see that from a chart. Yeah, let's say 1 year chart. Yeah, we have high Hurst assets tend to behave like this. We see a big spike up, then we see another big spike up, then we see a spike down. Maybe trading view will be better for that because we want to see the candles. Okay, so here's what I mean. I explained that in a video about Hurst exponent, but here is what I mean when I say about when I talk about high Hurst assets. So after green candles, another green candles tend to follow, and after red candles, also another red candles tend to follow. But basically, yeah, of course, this spread is gapping a lot, and it makes that Hurst go even higher. But it's still a good thing. So that's why you need to size positions accordingly, because of course, with such gaps, I mean, it can go down. The next day, it can go down a lot. So of course, you need to have your risk management in place. But I bought this spread on Monday. As we can see on Monday, we had some correction after the gap up, and the correlations was very low. So I added. It's a very small position. Entire spread is 2% of my capital, but the return on this is for now is really great. So let's move back to watch list. And another spread that I have is XLU IWM. I will also show you this as a spread, and we'll talk about it. This is more a macro US macro position. You can call this trade defensives versus cyclicals. And the theory behind it is that in the times of high uncertainty in bear markets, you can expect all of the sectors to fall, but usually the defensive sectors fall less. That's why you can expect to make some money. This strategy is very popular. Hedge funds use it, macro traders use it, long short funds use it. So yeah, but the main theme is defensive versus cyclicals. So now if we take a look, you can also see that Hearst is 0.72, not that bad. Upside downside ratio, of course, now after this week we see that upside downside ratios are not very good for the long side. That's why I expect all those spreads and assets to correct. It can happen. It's highly probable, but the theme remains the same. And now if we go and see the spread, so it's XLU IWM. It's a daily chart. And you can see, yeah, it's a daily chart. You can see that the trend is quite clear here for now. And basically, if we zoom out, yeah, so November 21, when was the first signs of the bear market, and I was not the first one to spot it, but basically the first sign in small caps it happened in November 2021. I became very bearish in December when all those signals were happening across the board already, and not only in small caps, but basically here is a great example of this theme that this spread was at 0.28. And now it is at 0.42. So in percentage terms, we are talking about like 50%. So it's crazy. And actually, I can show you a chart of cumulative excess returns. We are going to an end. I will not waste more of your time. I hope this video is useful. So I will show you a chart of from November 1st 2021 till now of IWM versus XLU cumulative excess returns. So here is the chart. So of course IWM versus XLU and not vice versa. If it was vice versa, the chart would go up. But basically, you can see that it's 40% starting from November 1st, 2021. And of course, XLU didn't go up by 40%. It's just because IWM fell a lot and XLU went up a bit. So yeah, so I think that we are coming to an end of this video. It's already quite a long video, so I hope you understand my view of thinking. Of course, I'm just showing you my daily routine here. Maybe I will do it on a weekly basis to talk about what's happening from signal perspective. We'll see. Let me know if you find those videos useful. But basically, what to take from this video in few sentences is, of course, that I look at correlations, and in correlations I always look for stock-bond correlation, then sector correlation to the SPY, and dollar correlation. And for international assets, I look for the correlation to the SPY. And then when I have assets in my watch list or overall theme or idea or bias for the markets, for the confirmation, I use not only correlations, of course, I use momentum, range, and trends on my fractal range. So never buy a bearish trend. Of course, it sounds funny, but some people do it, so I don't know why. Yeah, so never buy a bearish trend. Always check what's happening in different time frames. So think fractally, because there's always a trend somewhere. You know, if an asset is choppy on a 3-month basis, most likely it's not choppy on 4-year basis, and maybe something else is happening on a 10-day basis. So and it's important to understand those things. So yeah, hope this helps. I'm recording this video on 2nd of July 2022. So for those in the US, happy 4th of July, and yeah, hope this video answers your questions and helps. And yeah, thank you and bye.